What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Monday out there. Hope you guys are doing well, having a good start to your week. Being Monday, it is Bitcoin Fundamentals Report Day. So every Monday, I put out the most comprehensive newsletter on Bitcoin, and then I live stream, go through it with you, answer any questions or comments that you have. So make sure to put those down below. I am live streaming on YouTube, Rumble, Twitter, and Telegram. Telegram is the home base, so make sure you guys check that out. If you're watching on Twitter, where most of the live views happen, jump over to those other platforms. It's easier with the live chat and stuff like that. Okay, let's jump right into it. Share screen. Bitcoinandmarkets.com. Bitcoin Fundamentals Report number 317. The race is on for Bitcoin. So, snapshot of Bitcoin. We got a tease. The price teased us by jumping over 100K last week, then consolidating just under 100K here now. But we continue to consolidate right near the all-time highs, and there's no sign of a major dip. We've had a little bit of a dip over the last couple hours, but nothing major. We'll take a look at the live chart and also my forecast down below. Media sentiment, very positive. Of course, we are getting every day, it seems like we're getting another interview on CNBC that's talking about Bitcoin as digital gold. Today was Giancarlo, the old CFTC guy. He's going to be, well, I forgot what he has been nominated for in the Trump White House. Was it CFTC again? But yeah, he is going to be playing a pivotal role. He was being interviewed on one of the financial networks and talking very positively about Bitcoin. So, we just can't ask for more positive sentiment in the media right now. Network traffic is rising. Mining industry is very flat. We'll take a look at the hash rate and all that down below. Price, 96,647 at the time of writing. That's over $1,000 up this week, or right around 1%. Market cap hovering just under 2 trillion. Satoshis per dollar, 1032, and that goes below 1,000 when we get to 100,000. And one finny goes above $10. So one finny, that is my denomination that I like. It's 1/10,000th of a Bitcoin, right in the middle of the decimal places. And like I said, at 100,000, it's $10, and at a million, it's $100. Okay, mining sector. Previous difficulty adjustment was 1.5%. About 6-7 days ago. The next estimated right now is to be plus 3%, and that's 6 days away. Mempool, a little bit higher than last week. Last week was 108. It's 116 megabytes right now. Those are all the transactions waiting to be approved for anybody new to Bitcoin. Fees for the next block, under $100 at the time of writing, 7 sats, or sorry, under $1, 7 sats per virtual byte. And if you want to wait a little bit, you can get it confirmed for down to 68 cents. Lightning Network, bad week for the Lightning Network. Capacity dropped by 25 Bitcoins, or 0.5%, and channels dropped by almost 0.5% as well. On net, 185 channels closed on the public Lightning Network. So that's your snapshot of Bitcoin. Let me zoom in a little bit here. Maybe make it easier to read for people. Okay. Moving on to headlines. MicroStrategy continues to accumulate Bitcoin. I led off with MicroStrategy last week on the newsletter, and once again, this week we had to lead off with them. You can see Michael Saylor's tweet here. So that over the weekend, or within the last week, they've acquired 21,000 more Bitcoins at 98,000 per a piece, and now they have 423,000 Bitcoin. So well over that 2% mark. And if 2% of total supply, if you just take actual available supply, so, there's roughly 4 million Bitcoins that are thought to be lost forever. And so it's a lot more than 2%. It might be even getting close to 3% when you consider those lost coins. And I try to link to everything so you can go to the announcement right there on their website. Okay, next headline. Amazon to discuss holding Bitcoin. It is unlikely that any of these companies decide to add Bitcoin to their treasury at this time, but the Overton window has been opened. Eventually, they will do it. Everyone knows it. This makes the possibility of starting now more realistic. So you can see BTC Archive. And down here, shareholders request that the board conduct an assessment to determine if adding Bitcoin to the company's treasury is in the best long-term interests of shareholders. And I think that's coming up tomorrow. But yeah, so Microsoft, Amazon, Apple is next. I mean, every single boardroom will have to answer for this, and every single boardroom will have to answer for this in 4 years' time down the road when Bitcoin is what, 5, 10x from here, why they didn't add it to their treasury at the time, right? So this is holding their feet to the fire, hopefully getting some accountability from these people in the future. So it's a difference between, back in say 2014, listening to Jamie Dimon poo-poo on Bitcoin, or listening to Charlie Munger call it rat poison and all this stuff. But now there's going to be some accountability. The shareholders have asked you to put this on in your treasury. And if you deny it and Bitcoin 10x's over the next several years, hopefully you will be held accountable for this. So that's what's really good about all of this going on in the boardrooms for Bitcoin. Next topic, next headline. Czech Republic passes sweeping Bitcoin protections. You probably saw this video floating around on Twitter, but these are what has just been passed there in Prague. Bitcoin is taxed the same as stocks, so no capital gains after 3 years. That's a pretty cool deal. No capital gains after 3 years. So, I mean, minimum when you buy Bitcoin, you should have a minimum of a 5-year time horizon, if not a 10-year time horizon. So holding for 3 years is nothing. Local Bitcoin businesses have a right to a bank account. So no more denying Bitcoin startups, no more closing Bitcoin startups accounts, debanking them. So that's a good thing. And legal clarity on the MiCA regulations from the EU. So not much clarity exactly on what that involves, but the EU has all these weird things that they want to do against Bitcoin, and the Czech Republic clearing that up is very helpful. So there is that story for you guys. Next up, David Sachs appointed as Bitcoin and AI czar. David Sachs, a prominent crypto bro, has been appointed as the Bitcoin and AI czar. And I realize it's crypto, but it's all about Bitcoin. While not a Bitcoin purist, all incentives eventually align with Bitcoin's growth. This is an overall friendly pick for the Bitcoin industry. Contrary to concerns about government crackdowns on Bitcoin, the US government is becoming more populated with Bitcoiners by the day. David Sachs is part of the PayPal mafia, part of the very early team that included Elon Musk and Peter Thiel. So he's well known. He's on the All In podcast. He's well known in the Silicon Valley area and community and stuff. So this is a very big pick by Trump. Okay, moving on. Next topic. We're zooming through these here today, guys. Let me check comments to see. 135 people watching. No comments yet. Come on, guys. If you're watching on Twitter, please jump over to the YouTube and Rumble. If you go over there and subscribe, boost my subscribers up to that 1,000 on YouTube so I can get monetized. But appreciate you guys joining today. Let me see if there's any in Telegram, since it's kind of a separate stream. We have Boog. Okay, so you have a request, Boog, for me to respond to that video. I will do that, but not obviously in this stream. Maybe I'll do that tomorrow or something like that. Joachim, yes, pleasure to have you here. Yeah, I try to live stream the same time every day. I've thought in the past to move it around, but my schedule right now with trying to write in the morning and then go live in the afternoon, that's working out real well. But maybe in the future we will move it around to see if we can hit a few more people tuning in. Okay, let's get back to the report. Powell gets it right on Bitcoin. So this was big news last week. Fed Chair Powell was asked a question about Bitcoin challenging the dollar, and he said that Bitcoin did not compete with the dollar, but instead was a competitor with gold. Interestingly, he got this exactly right, and we covered this last week as well. Bitcoin is to the dollar like gasoline is to gallons. The dollar should be considered a measurement of an underlying asset. If the dollar was ever under existential threat from Bitcoin, it could simply be backed by Bitcoin, like it once was by gold. The major takeaway from this comment is, however, that Bitcoin is seen by the elites as a real thing, a real competitor to gold. The digital gold meme worked. With gold's global market cap of 20 trillion, this means Bitcoin's 2 trillion market cap has some growing to do. So again, right here, this 20 trillion to 2 trillion, that's a 10x. And now think about that in terms of going to Amazon and going to Microsoft and going to Apple and asking them to put it on their balance sheets. When the elites right here, Powell, the elite of the elite, the chairman of the Federal Reserve, is saying that this market cap should be 10x. All right. Pretty crazy stuff. All right, next headline. El Salvador makes Bitcoin voluntary to secure IMF loan. This news makes little sense. El Salvador simply had to say that they would make Bitcoin acceptance voluntary for businesses instead of how it is today, where Bitcoin must be accepted everywhere as legal tender. Perhaps the IMF's goal was to effectively take away that legal tender status, but they didn't accomplish much of anything. If businesses have paying customers using Bitcoin, they will continue to voluntarily accept it. There is one possibility that I see, and that is the IMF thinks people are only using Bitcoin because they're being forced to use it. They are so deluded that they think by making it voluntary, the people will be able to express their true feelings and not use Bitcoin. So these people like the IMF, the globalists out there, Davos and ESG people and all of this, they are so deluded that they think people really don't want to use Bitcoin. And so by making it voluntary, people won't use it. They're doubling down on stupid, and they just have no clue of what the common man thinks. They are lost. So anyway, let's move on to the macro section. Real quick, just checking comments one more time. Not seeing any. All right, guys. CPI is this week. I believe it is Wednesday. I will be live streaming if at all possible. So the Cleveland Fed's inflation nowcast is estimating 0.26% month over month for November, nearly identical to October's 0.24%. That is above the 0.17% target that's needed to get you to 2%. So if you have month over month for 12 months at it's actually 0.166666, then that gets you to 2% over the 12 months. So that's your target. If you're below that, then on average, you're going to be below the 2%. And of course, this is not, I found this really cool chart here on macro micro, link to it here. You can see this is from the Cleveland Fed's nowcast. And there's a tooltip when you go to the website so you can see, interactive with this. Pretty interesting. I also went to just the Fred site and got the month over month. And people were freaking out about this little tiny tick up here at the very end. Looks like it might, be about the same this month. But overall, guys, over the last 18 months, this is a downward bias to this chart. And I still do expect CPI to continue to come down in the near future. However, US GDP is doing pretty well. So the economy is actually doing well right now. And that might keep CPI to stay, it might stay elevated slightly longer than I've anticipated. We are in known danger of a reacceleration of inflation, but 2.5 to 3% might drag on for longer as lots of capital flees China and Europe into the US. So this is kind of this wild card here. With China having problems, Europe having problems, a lot of capital is flowing into the United States. And so that is going to keep our GDP and our prices higher. And so that's what we're looking at. But still, most of the increases do come from Shelter. So we'll see how Shelter acts this month. It could be a surprise to the downside. I would not be surprised to the downside. I would be surprised with anything that's much higher than what they are predicting here from the Cleveland Fed. And this is the GDP now from the Atlanta Fed. And you can see it's way over 3% annualized. And this is for Q4. So US economy doing pretty well, but getting all of that capital uh, injection from China and Europe right now. Okay. Moving on to China. China's economy continues to grind into crisis. I've said for a long time that their basic model is that, okay, this is typos, is that their economy was a centrally planned export driven model dependent on a now bygone era of globalization. Globalization is not coming back. It's actually going away faster and faster. All these talk about tariffs is just anti-globalization. And so the era that built up China is different now. It's gone. And export driven model just doesn't work. If you have like your economy is China's economy is like 17% of global economy, something like that. But they have, I don't know, it's like 25% of total manufacturing. So they simply don't have room within their domestic economy to absorb that. So they have to export it, right? Well, that's becoming harder and harder. Anyway, so to save their economy, they have to switch to a domestic consumption-based model. However, that does not fit with the communist-style government. Therefore, they have hit a decision point. Boost domestic consumption and lose communism, or double down. They are trying to double down. So this is from today. They had a Politburo meeting. They want to boost consumption, improving investment efficiency, and expanding domestic demand. Expanding domestic demand and boosting consumption. Those are the key words here. But they also want to maintain stability in their system. They don't want to have like some revolutionaries or people getting the wrong idea. Like, no, you're not free. You're not that free. Don't get any ideas. And they are continue with their anti-corruption work. So they're cracking down at the same time that they're trying to boost consumption, and it just doesn't make any sense. The reason they can't boost domestic consumption is because it requires loosening control. The minute they do that, there will be massive capital flight, brain drain, and the people thinking, maybe we don't need these communists in control. No, instead, they will almost certainly govern harder. They will try to dictate consumption and production, inevitably leading to more malinvestment and misallocation of resources. Things will get worse and worse until change is forced by the people. Michael Pettis has a good tweet here. You can see it was 5 out of 5, this little thread from today. Producers are unable to make money. A Chinese friend of mine, so he's a professor at Peking University and has been over there for, 20 years. So he is very, very familiar with China. But a Chinese friend of mine who owns several factories told me last month that the only way he can make a profit is by selling into Europe. Every sale in China is done at a loss and is done just to keep production going. So does that sound like they're close to boosting domestic consumption? What happens to their businesses and their factories and all this stuff when they can't sell abroad? It's not a pretty picture. Okay, so that's it for China. Next is El Salvador. I think this is the last one for headlines. So El Salvador announces massive gold finds. President Nayib Bukele revealed that El Salvador has discovered up to $3 trillion in unmined gold. And he is now moving quickly to repeal the mining ban regulation so that miners can get to work. So you can click on here, watch this video where he talks about this. I mean, one thing you got to think of is how economical is it to get it out of the ground? Because, you hear these stories about Afghanistan being full of trillions and trillions of dollars in minerals and stuff. But the reason why it doesn't get mined is not because the evil United States or Western countries or controlling Afghanistan or anything like that. It's because it's uneconomical to get it out of the ground. So if there's $1 trillion in minerals, but it costs 2 trillion to get it out, you're not going to get it out. Those trillions of dollars worth of minerals are going to stay in the ground. And it's the same here with gold. So if it's just too expensive for some reason or other to mine this gold, then this gold will stay in the ground. However, this does put on stark display the superiority of Bitcoin. $3 trillion of gold. That means that's about, let's say, if it's 20 trillion in total market cap for gold, this is what does that make it? 15%. 15% of total gold supply in all of these deposits. That's pretty crazy. And so that can't happen with Bitcoin. The only way it could happen with Bitcoin is if, say, somehow somebody cracked Satoshi's wallet and those Bitcoins came back on the market. But it still can't be more than 21 million, right? So there you go. That is all of the headlines. Before we get into price analysis, let's check on comments. Still no comments, guys. 214 people watching. If you're watching over on Twitter, you can jump over to the YouTube Rumble, make comment there, like the interaction with folks. But if there's no comments, I'm just going to continue with the newsletter here. If I can maximize the screen again. All right. So price analysis. Last week, I said my base case for last week remained consolidation, sharing characteristics with the October 2023 pattern, but with the most likely scenario of a breakout by the end of the week. Well, we did have a breakout. We did break 100K, but it didn't result in a rapid rise afterwards like I had been thinking would happen. Once we break that 100K, it races to 110 pretty quick. We did get to 103, but it has since come down. So the price just teased us by getting to 103, and now it's continuing its consolidation. The October 2023 pattern has remained nearly perfect. The longer we hover around 100K, the stronger the volume support will be once we break it. So it could be that once we get to like 120 or so, we will never break 100K again. So that is what we're building here, is support at 100K. And you can see this orange is the October 2023 pattern superimposed onto this rise. It was about the same amount of rise, same amount of time to find this spot over here on the left. 100K was too attractive. We went up and tested it. Then we got right back in line, went over 100K. Now we're back in line once again, testing that 20-day moving average and this October pattern. But I'm not worried at all. I think there could be a wick down below 90,000, and then just to flush out all those longs, and then we can go higher. But at first I didn't think we were going to get to the end of this pattern, but now it's starting to look more and more like we are. I thought this was going to be the breakout, but it tricked us. It teased us. Let's take a look at the live chart here real quick. So we did get a little bit of a wick here down to about 94. I wouldn't be surprised with the wick down to 90, just to grab all that liquidity from a bunch of longs, and then we can break back up above 100K. But all we have right now is dip buyers. So let's go back to the report and go on with this. So all dips will be bought as new companies follow MicroStrategy's lead. Jet King out of India is the latest in this regard. They are a relatively small company with about a $5 million market cap. I expect this to catch on in India, perhaps faster than the US, due to the continued collapse of the rupee. And we showed that chart the other day on another live stream. The rupee is just really, really weak and in a constant sell-off against the dollar. I mean, it's only a few percent a year, say 5% a year, but year over year, that weighs on you. So I can see how this would catch on in India, and this being the first public company in India to do this strategy, maybe it catches on pretty quickly there. Genesis Group is another one, small company that's buying Bitcoin. They are an AI company. which also makes sense. Bitcoin will be the way AI interacts with the market. AI can earn and control Bitcoin, by private keys because it's all digital, and it will be able to get market signals through prices in Bitcoin. So, really, AI to interact properly with the market, it will need to use Bitcoin in the future. While these and others are relatively small companies, their combined impact is significant. They also move the narrative forward. This strategy is not just for large Bitcoin companies, it's for the little guy as well. Bitcoin miners Riot and Marathon are also buying hundreds of millions of dollars in Bitcoin regularly, and giants like Microsoft and Amazon are considering adding Bitcoin to their balance sheets. So, if you go back several months, much of the news was about large sellers of Bitcoin. For example, a German state sold 50,000 BTC, and Mt. Gox was distributing 150,000 BTC. Now, all that narrative is reversed. There are no sellers in the headlines, only buyers. The speculation last week on X that the US government was about to dump some Bitcoin has come to nothing, as expected. And then here's just a chart of the ETF flows. I threw this in here to add some more context. It's, reaccelerating once again to the upside. We'll see how that affects price here coming up. My base case for this week remains consolidation sharing characteristics with the October 2023 pattern. So this pattern has served me well over the last month or so, that, we are just going to follow this pattern because the general trend is, let's go back to the chart. The general trend is dip buying. So these large buyers out there are going to buy any dip. And what does that result in? It results in consolidation upwards. And so that's what we have seen. And that's what I was expecting, right along with this pattern. And that's what we got. Okay, what else do I say down here? While price has broken the 100K mark, we are waiting for price to really take off to the next higher range. As price hangs out just under 100K again, there is a chance we see a slight flash crash down to 90,000 or so, right before rapid recovery and new highs. So be careful with leverage. So that would be another big point this week, is there is a possibility that we have a little flash crash to flush out the longs before we go higher. So, don't be using a lot of leverage out there if you're our Bitcoin trader. All right, that's it for price. Let's take a look at any comments before we go on to the next section. Where am I? There's my arrow. Still, I cannot believe there's no comments today, guys. 246 people watching. Let me check Telegram, see if anybody's chatting over there. Not seeing anything. Hope everything is working properly. Usually we have several people commenting by now. All right. Let's get back into it. Headlines for the mining sector. So Riot follows in MSTR and Marathon's footsteps, offers convertible notes to buy Bitcoin. Riot announces proposed private offering of $500 million of convertible senior notes. Net proceeds from this offering will be used primarily to acquire Bitcoin and for general corporate purposes. And this is from their website, the announcement. It'll probably be higher than this. It seems like all these offerings started around 500 million or 600 million, and they easily get up to $1 billion by the time that things come through. So again, buyers, these are dip buyers. They're not, all of these big guys, they're not going to come in and smash buy with 500 million. They're going to buy the dips. So they're not moving price. So they're not slipping. They don't suffer slippage. They just put some bids in, 1% below price. And then as soon as it gets hit, they're buying all of those dips like that. So that's what I expect to continue to happen. All right, next headline from mining sector is Bitcoin miners move 85,000 BTC, price unaffected. And here's why. This is via News BTC, but I found it on TradingView. They have like a blog kind of section there. So quoting from this article, well, first let's take a look at this chart. You can see that as price has been going up, Bitcoin held by miners is decreasing from 2.08 million to roughly 2 million. And so that is about 80,000 Bitcoins. So if you add up all what has MicroStrategy's been buying and all these other people over the last couple of weeks, this is where probably a lot of that supply is coming from, being sold off here by miners. Okay. Sentiment, that's the what kind of what word am I looking for? It's the metrics provider or the outfit here that's doing this chart. They state that these mining wallets have now transferred out 85,000 BTC, valued at 8.5 billion over the last 48 hours. All right, so couldn't be filling the MSTR bags because they didn't buy that much in 48 hours. But very interesting. Generally, increased outflows from miners could indicate a bearish shift in price momentum. Maybe, maybe not. However, the team at Sentiment postulates the recent Bitcoin offload should be considered a net neutral signal with no inking on Bitcoin's price movement. This notion is based on Bitcoin miner balances showing a weak correlation with price for the majority of 2024. Moreover, non-mining whales and sharks continue to accumulate Bitcoin, signaling confidence among investors in the asset's profitability despite miner activity. So there you go. I agree. This is right now, it's net neutral. It's hard to get any clear signal. If we have more information that we can maybe connect some dots on this in the future, that would be helpful. But right now, just looking at these wallets, we can't make any real conclusions about what's going on. All right, hash rate and difficulty. Hash rate has remained incredibly stable the last several weeks, even as price breaks 100K. It seems as though miners are maxed out for the time being. The largest public miners are busy raising money to buy Bitcoin outright. This flat behavior is something I'm going to be watching over the next couple weeks. If hash rate does not spike on the next price breakout, there might be a bigger story here. So look how flat this has been. It's very uncharacteristic, really, that the hash rate has been so flat. So for two difficulty adjustments, it's just been really flat. There could be something to that more, but we'll have to wait and see if we can connect some dots with future data. Okay, mempool. Mempool has increased this week with significant numbers of transactions paying higher fees. This is behavior that we expect during excitement in price. People are moving lump sums of Bitcoin to and from exchanges and tend to be fee insensitive. So here is with all of the transactions, you can see the rainbow band is kind of expanding right here. We're not showing any spike, like an imminent spike where it gets really, there's a few, but really expensive transactions. They're paying a very high fee that are urgently trying to get through. We're not seeing that. We're just kind of seeing a build of these transactions, a build in activity here. And if we strip out that pink section, we get a little bit better idea. So again, we're not seeing a big spike in actual fees. We're just seeing a build up of activity. Okay, and layer 2, there is nothing significant to report for layer 2, so I left that out. Let me go back up to the top, and I'll take a look at comments. Dex Invictus back with us. John Delaney, what's going on? Welcome to the stream, guys. Any questions, comments, put them down below. Let me check Telegram, see if there's anything in here. Nope. Nothing in Telegram either. So let's take a look real quick. That was such a fast stream. Let's take a look at some more charts, and then we'll hit the road. So this is Bitcoin price. 4-hour candle is now back into positive territory. Again, following this pattern very closely. This kind of sell-off. So this sell-off right here could be, an early indication mirroring this type of thing. So there you go. Maybe we have finished the sell-off now and we're just going to go back up. So we will see how that turns out. Okay, what other major things can we look at here? How about gold today? Let's go to the daily chart. Green on the day, but nothing really exciting to report about gold. There was that video of Michael Saylor saying we should dump our gold and buy Bitcoin with it, which is hilarious. And I agree. And I responded to somebody's tweet out there. Who was it? It's like a common gold bug macro account. It's not a person's name, but it's like their company account or something. But they were saying how silly it was that Sailor would say something like that you dump your gold to buy Bitcoin. But here's the thing. It has been said now. It has been said. And all gold holders now must take that risk on board, and they must price in that risk of dumping gold to buy Bitcoin. That just being voiced breaks open that Overton window, breaks open a whole new risk category that they must price in. And it's not insignificant. I mean, I wouldn't put it at a high percentage right now. If we look at Polymarket and the chance to a Bitcoin strategic reserve in the first 100 days, it's still sitting at 29%. So let's say 29%, and then there's maybe a 10% chance that we would sell our gold to buy the Bitcoin reserve. So, we're talking about single digit probabilities here, but it's still a possibility and it needs to be priced in. Okay, so that was gold. Let's take a look at the dollar. Nothing significant to report here. Kind of waiting to see how this pattern finishes out. Nice descending wedge here. We'll probably break to the upside and we'll see where that goes from there. Zooming out to show where this line came from. Break resistance, back down, and probably break through it again. So that's what we got. US 10-year. Been watching this really closely. If we go down to like the 4-hour, you'll see this path that I drew here, because not only is this like a trend line here that was broken, but if we bring up the 20-day moving average, it's right through there. And I was talking about this. Where is it? That one and this one. There we go. I was talking about this Adam and Eve forming here. So we had this rally in the 10-year, bottoming pretty much right when the Fed is starting to cut rates back in September. Then we had the China stimulus. Then we had Trump looking like he was going to win the election. And all of that energy was optimistic for the market. So interest rates are yields, long bond yields. They rise with optimism because they're forward looking of growth and inflation expectations. And so as people get this mixed up, though, when you hear the growth and inflation expectations, people think inflation, it's rising because inflation worries. But inflation is synonymous with growth. So it's growth slash inflation expectations, because in a credit-based system, you have to expand the money supply to get growth in credit and growth in business. And so, you have growth slash inflation expectations. It's not growth and inflation expectations. Anyways, so this is optimistic, or this was optimistic rising and then turning over. It just got overplayed. And so that's why I said this was going to be coming down, and it followed my path very, very well. I drew this pretty much right, probably as it broke, or maybe the day before it broke down, and it followed that path almost identically. And it has a downward bias. I mean, it has gone up here over the last couple trading days, but this bias is to the downside. All right, so that is that. Oil is another one I look at regularly. And we'll go back to the daily and get this out. So it went up a little bit today, but overall, it's looking very, very weak. We'll see where this goes. If we break down out of this, guys, it's going to go a lot lower. This support right in here, if it breaks this support, it's going to go a lot lower. I mean, down to 60 probably. All right, and S&P 500 down on the day, kind of breaking out of this pattern a little bit, but nothing really to be concerned with for the time being. If it breaks support, breaks down below this red line, then we'll have to take another look. But for right now, all systems are go in the pre-recession trade that I've been talking about for a long, long time. Back to Bitcoin. There we go. All right. Checking comments here. Not seeing any more comments, guys. So I am going to. Okay, AJ, you asked what happened to the end of the pattern. There you go, man. You can see it right there. The pattern quickly rises. So if we do the same thing that we did last time, this goes over 110 very, very quickly. I think it's probably going to go higher than that even when this does eventually break out. So there you go. All right, let's go back to the website, bitcoinandmarkets.com. Make sure you guys go over there, join the free email list, get all of my stuff into your inbox. And that's going to do it for today. Thank you for joining me, guys. And I'll see you on the next one. Bye.